Hello everybody, I thought we'd make a start. Welcome to this week's live stream. It's our weekly recap and market outlook for next week. We do these normally every Friday at 2:30 UK time. And in a nutshell, we catch up with what's been happening on the week and take a look at what to look out for next week. Go through the markets. We'll go through the usual major markets, and then if there are any markets that you want to have a look at, if you put them in the chat, I'll go through those when we've been through the usual stuff. Let's just do the risk warning first of all before we get into it. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences that result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 76.25% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. So we've just had the payrolls come out, the non-farm payrolls, the monthly release. This is the Nasdaq. It was a big miss in the end. The expectation was for about 500,000 jobs to be added in the US economy in September. The number came in at 194,000. You can see the market reaction. This is a 5-minute chart of the Nasdaq. And I often say, if you're going to trade payrolls over payrolls, I think you're better off waiting, because the market can often be something like a headless chicken when the numbers come out. And if I show you what happened, this is where the number came out here on the Nasdaq. It was trading around 14,925, traded down below 14,900, ran all the way up above 15,000, and here we are now back to where the market was when the number came out. So you can often see lots of volatility, but no real direction from markets when these numbers come out. So we'll see how the rest of the afternoon goes. Let's just take a quick look at stuff to watch next week, then we'll get into the markets. So next week, Tuesday, UK unemployment. Could be interesting after furlough is sort of coming to an end, what the UK unemployment numbers look like. Wednesday, US inflation. Clearly inflation is a hot topic at the moment, and it has been for some time. With rising prices that we're seeing, rising energy prices, oil prices. We'll have a look at some commodities. Some of the prices there have been rising a lot this year. So that'll be an interesting one to watch, I think. And also on Thursday next week, we have China inflation. So quite a big week for inflation next week. To find out more about Capital.com, go to Capital.com, not surprisingly. You can open a demo account, open a real account, download our app, all that sort of stuff. Any questions after today, feel free to send me an email. Email address is david.jones@capital.com. You can follow me on Twitter. I'm at JonesTheMarkets on Twitter. And you can follow Capital.com on YouTube, Twitter, and Facebook. Okay, let's take a look at the markets and what's been going on. Let's start off with the Nasdaq. As we've seen this move, let's go back to the daily charts. And it's been a trickier time for stock markets, I think, during September. You can see here in the Nasdaq, we saw the market pull back from 15.7 to 14.4. So we saw a 1,300 point pullback. We've got to go back to February of this year to see, a decline that was bigger than that, I think. So, we've had months, it feels like, of markets just gently rising, not much volatility, and we've definitely experienced volatility over the last 6 weeks or so. And I think, inflation is going to be the big theme for markets going into the end of this year and going into next. Central banks have said inflation is just going to be temporary. I'm not that sure about that, but let's see. Let's see what happens. But here's the Nasdaq trend, and I think last time round I was saying, perhaps we are seeing a shift in sentiment for stock markets over the last month or so. The Nasdaq has fallen out of this trend that's been in place since March 2020 now. I suppose there's a couple of ways of trading this. I think an aggressive trade would be to treat this sell-off down to 14,370 as an overreaction and be a buyer. Be a buyer, assuming the market's overreacted to the downside and we're going to go back up to those all-time highs again. I think that's one approach. I think the other way of looking at it is taking the view that we do have a new trend forming off these highs from middle of September, looking something like that. So I think next week's going to be interesting to see how do these stock market indices perform. We've seen a strong bounce back over the last 3 days. You can see that on the chart here. But for the Nasdaq, we've got that downtrend coming in around about 15,250. And I do think stock markets could be a bit more cautious, I think, in the months ahead. So I think there's perhaps the opportunity to trade markets a bit more in both directions, rather than this endless grind up that we've seen. So I think it's going to be interesting next week because we do have this fall out of the uptrend for the Nasdaq and perhaps this new downtrend forming. So I'm expecting more volatility for stock markets, and perhaps we're going to have to be patient until we see fresh all-time highs again. Let's take a look at the S&P 500. So a similar picture for the S&P, and again you can see that trend that had been going since March 2020. All was okay. We had sell-offs along the way, but they'd only last about a week, and then bang, the market would bounce back. This one has been different. So since the September highs, we've seen the market trade back to its lowest levels for a couple of months or so, 2.5 months, and build something of a base around 4,300. But like the Nasdaq, I think the question for the S&P now, if we picked up on that trend off the highs, what's it going to do here? If you thought that actually this was a new downtrend starting for the S&P, or we're within a downtrend for the S&P over the last month, where it's trading now and where it was yesterday, looks like a good opportunity to sell short. So again, going into next week, I'll be watching this sort of, and today, this sort of 44.40 area, see if the market can crack it. But it is looking, it's a little bit weak at the moment. We've still got, the market's only just opened. But I think it is interesting that we do have, for the first time in a long time, conflicting trends on these stock market indices after months and months and months of markets just grinding their way higher. So maybe the game gets a little bit harder if we're only looking at the long side from now on. Let's take a look at the DAX. I did a good trade on the DAX yesterday, even if I do say so myself. Or the day before yesterday, I put the trade on. But the DAX dropped on Wednesday, dropped down to 14,800, the lowest level for the DAX since May. So we saw nearly a 5-month low on the DAX this week. And again, like these other indices, it has fallen out of its trend. I think again, it's another interesting one, an aggressive tactic here, a bit like the Nasdaq trade. If you thought actually the market reaction has been overdone, to be a buyer with a stop the other side of 14.8. But then again, I bear in mind, like with the Nasdaq and the S&P, are we seeing a new downtrend falling? So stock market's definitely a bit twitchier, looking a little bit more nervous than we've been used to. The Ftse in the UK, boring, but the Ftse is trading pretty much where it was in May of this year, pretty sideways, like you can see, over, 6 months now, the Ftse's been going pretty sideways. Lots of support at 6,800, can't really get through 7,200, it's just sort of stuck a bit in the middle of the range. So not very exciting, the Ftse, but a definite range there to trade. And the Japanese market that had that great run in August, wasn't it? There we go. Look at the crazy volatility for the Nikkei. So we did have that run higher in August into September, that it very briefly, I think, touched new highs for the year, but it's completely dumped the other way, and it's back to the lows from August, which were also new lows for the year, pretty much. So I think it's interesting. Again, if you thought, well, markets are overreacting, being too negative at the moment, it's an interesting trade down here looking to see if that ends up being a floor. I think if we saw it start slipping below 26,800, we have to worry about the potential for a much deeper sell-off for the Nikkei. So we'll see. We'll come back, or clearly we'll come back to it over the weeks ahead and see how it's performing. But a floor at the moment down there. But again, we've got pretty nervous stock markets, I think, at the moment. So a shift in sentiment over the last month. I just saw that someone had mentioned commodities in the chat. I'll just show you one market, absolute great market. I've mentioned this a bit in the past, but it's been just a crazy move. This is cotton over the last couple of weeks or so. So I've traded this a bit in the past, and I did actually put a trade on here and ended up nearly getting stopped out, but luckily didn't. And the market's just taken off like a rocket. But this is, I think, very interesting when you think about what's going, inflation, concerns about inflation. And if you look at some of the commodities, raw materials, that sort of thing, look at the price of cotton and think, how many things cotton goes into these days. But cotton ended December last year at around 77 cents. And here we are at $1.14. So the price of cotton is, that's 50% higher and a bit more. 50% higher now than where it was at the beginning of the year. So we are seeing so many of these commodities just increasing in price this year, and it has been an absolutely crazy move over the last couple of weeks, but a fantastic move off that trend line at 90. I think my stop was in about 89, so I just missed getting stopped out on that, and bang, away it's gone. Really overbought at the moment, cotton, but keeps going up. So cotton has basically traded to its best levels in 10 years over the course of the last week or so. So some big moves going on in these commodities, but we'll come back and look at some other of these commodities as we go through. But as we're on the topic of rising prices affecting inflation, crude oil. So I've been wrong-footed a bit in this bit here, really, for crude oil, because I did wonder if we pick up on the trend, what the trend used to look like off the April lows last year. It was something. If I could draw it, it was something like that. And I wondered, with the weakness we saw in August, were we seeing finally an end to the rise in crude oil? And I went short and got stopped out on the way up. But this week, we've seen it push out to its best levels since, let's wind the chart back, October 2014. So crude oil is at a 7-year high. We saw this week, we had news from OPEC, I think earlier this week, beginning of the week, that they won't be increasing production in the months ahead. They're going to stick with their planned increase in production of oil, and they're not going to ramp that number up. So that was something, again, that helped lift the oil price. An incredible trend in oil. I mean, here we are pretty much, even as we speak, pushing out to almost fresh 7-year highs again for oil. And I know a lot of people have been shorting this market for a lot longer, for over the months, and getting absolutely clobbered. And I think it's a great reminder that markets can move much further in one direction or another than you may think. Who would have thought this if we wound the clock back to April last year, when oil was $11 a barrel, and famously the May contract went negative, that a year and a half later it had gone up 7-fold and was trading at a 7-year high. Incredible move in oil, but at the moment at least, no stopping it. So if it comes to looking at targets, where would you go? I mean, you could start saying $100 a barrel maybe. I think Goldman Sachs upgraded their target for the year end to $90 for oil. If you look at the size of some of the moves recently, if you look at the move from the August low, so just in the last couple of months, the price has moved $18 in less than 2 months. So, I don't think if this trend's going to continue that $100 a barrel is that ridiculous. Would I buy it now? I don't know. I suppose if we break out through 80, you'd expect a bit of momentum in the oil price. It's all about where would you put your stop, though, where it is for me. And I'd want my stop at least below yesterday's low, which is at 74. For me, the better trade here, or for me, the more comfortable trade, is to wait to see if we get a sell-off, back maybe down to the low 70s, but maybe it doesn't come. But, absolutely incredible move in crude oil. It's still very strong. Natural gas, of course, has been hitting the mainstream news. How expensive energy prices are, and this trend in natural gas. We've watched it a few times this year. Great trend, and it's a great lesson actually that by the time stuff hits the mainstream news, you probably would have seen it in the markets for a few months before anyway. And we had this great trend in natural gas running higher, and it really took off in mid-August. Mid-August was about 380, and it touched 650 a couple of days ago. Really volatile over the last couple of days. I think quite hard for me anyway to trade it when it gets volatile like that. We have seen short-term support come in for natural gas around 540. Let's see what happens, and if we do see it surge higher from here. Again, for me, perhaps the more comfortable trade is to wait to see if we get a bit more of a sell-off, maybe below $5, but maybe we don't get it. But an incredible move in natural gas over the last couple of months or so. So that's that one. Let's look at gold and silver. I saw they were moving on these payroll results, the prices of gold and silver. And again, it's great. It's a bit of volatility is great. If you look at the move, look at the move in gold. There we go. It's big. That's a big old move, relatively speaking, or it was. So the payrolls came out. Gold was at 1762. It jumped nearly $20 higher in the next hour or so. But here we are, selling off, and perhaps heading back to where we were before. So exciting in the short term. The trend for the year is still pretty sideways, pretty boring market. Lots of support from 1660 through to 1680. Perhaps we will see a bit more strength in gold next week. I said I'd be a buyer. I think I had an order in actually from a video we did. Hold on a second. I think I did have an order in. Yeah, it didn't get filled. 1720. I was trying to buy 1720 on gold. So the market did trade down to 1721.5. So I missed that. Let's see what happens next week. Maybe it will still get filled. So I'd say, I'd rather be a buyer than a seller for gold at the moment because we have been near the bottom of the range for this year, but it's still pretty directionless for me. If we go back to the big trend from 2018 is still up. So again, I'd have to say medium to longer term, still positive, but just still a little bit boring in the short term. If you looked on an hourly chart, you can take the view. I think it's a fair view that the correction that's been in place all the way through September has perhaps come to an end. So if I was a buyer now at 1770, the closest I would want my stop is the other side of this sideways range, the other side of 1745, personally, for a short-term trade. So let's see what happens. So perhaps we get a bit of a move higher in gold next week. We'll have a look at it and see what happens. And silver's had a move as well. I'm short silver at the moment, so that not really helping me. But if you take a look at silver, if you go on the daily, there's the move. So it was trading around 22.50 when the payrolls came out. It jumped up near $23.20. But again, as I often say for silver, it's a boring market this year. It's just been over the last 12 months, pretty flat for me. The trend since June, this was the reason I went short in the last video we did. The trend since June is still down. So for me, I personally would still be using any strength to go short silver. I think it's only if it starts breaking through, let's call it 23.50, would I change my mind on that medium-term trend since the June highs for silver. So a bit of excitement today, but doesn't really change the picture for silver since June. If we take a look at some of the cryptos, so we've got Bitcoin. Positive. It's had a good week, Bitcoin, hasn't it? I mean, I think when we've looked at this in the past, I've said that it is bullish. I think there's a trade in here somewhere from an old video we did. There we go, on the 20th of September, buying at 43,000. The price now is 54,000 and a bit. So up 400 quid or so on that trade. I think it's still positive Bitcoin. We saw the sell-off and the sideways from May till July. It broke out of that sideways range in August, sold off a bit, but still positive. So for me, it may take some time to get back to those all-time highs, assuming it is going back to the all-time highs. But it's still positive. I'd still be a buyer on dips in Bitcoin, and I think it's only if it starts trading back below the September 21st low, around 39,500, would I worry about a deeper sell-off. We'll take a look at Ethereum. I'm guessing Ethereum is going to be pretty much the same. Oh, it's not quite. Yeah, it's a bit more sideways than Bitcoin, but broadly speaking, the same sort of outlook. Bitcoin looks like the better performer over the last couple of weeks or so. But for me, lots of support down at 27.50 for Ethereum. So even if it sold off from here, I'd still be happy to be a buyer. So let's see what happens with that. And the other currencies, you look at the pound and the euro. I found these quite frustrating markets, to be honest, because a good first half of the year, or from September last year into Feb and a bit into May this year, some quite good trends in the pound against the dollar, but sold off since then, and briefly, end of September, traded down to new lows for the year. So a little bit scrappy is how I perhaps best say these markets, and I've not traded them for a couple of months. I think the pound, and just needs to make its mind up. You could argue the trend from up here is still down, looking something like that. So arguably, if we've got a bit of strength, another 100 or so points from here, it could be interesting to look to be a seller if it runs up there. But I find it quite a difficult market personally for me, because we've had this sideways and maybe it's rolling over. Similar picture for the euro. I think the euro is still pretty weak. I was wondering and expecting these old lows from September and November last year to hold down at 116, but here we are this week. The euro has traded to its worst level against the dollar since July 2020. So that's weak. So again, for me, I'd have to say that the trend on euro US dollar, if we pick up off the June highs, still pretty weak. So for me, even if we did get something of a short-term bounce from here, I'd be inclined to be a seller into any strength for euro US dollar, because it has broken some big support there. Let's see what happens in the days ahead, but definitely quite trickier markets, I would say, the likes of the euro and the pound, for me at least. So what we're going to do now, we're going to jump into the comments and the questions for any markets you want looking at. So we've got a good question, first of all, actually. What is a good ATR strategy for the stop loss? So ATR is average true range. Okay, so it's like if we bring up, let's go back to the Nasdaq. Let's bring up our Nasdaq 100 chart. And you can add an indicator called average true range. There we go, average true range, there we go. And it looks at, not surprisingly, the average true range over a period. So this is 14 days, ATR 14. So this is looking at the average range for the Nasdaq over the last 14 days. So it's coming in, it's reading around 240 at the moment, so 240 points. So some people would use it. I wouldn't use it that way, but some people would use it as a way of figuring out where their stops go. It's not a bad guide. I think if the average daily range is around 250 points, if you're trading the Nasdaq with a 20-point stop loss, for example, you're probably going to get knocked out in the noise of the market. So I think it's an interesting way of thinking about the day-to-day volatility for the market and how to place your stop losses. For me personally, I don't use ATR for stop losses. I look at the price action. So for me, if we looked at the Nasdaq, if we were doing a short-term trade on the Nasdaq, for example, I mean, we've sort of maybe missed it now, but I would be looking, if I was a short-term trader, I'd be looking at yesterday's highs, right? Yesterday's highs were 15,014. If we were selling short up here at 14,960, the absolute closest I'd want my stop is above yesterday's high. So I tend to look at major turning points for the market to try and figure out, well, where are my stops going to go? I've got a short in my own account on the DAX at the moment, and I was a little bit early, but the trade I've done is exactly that trade. The DAX, this is actually maybe a bit clearer than the Nasdaq. The DAX yesterday pushed up to 15,240. And we have this old resistance going back to the beginning of the month. So the highs for the month for the DAX are about here, 15,270. So I went short yesterday with a stop above 15,300. So for me, I look at the levels in the market for setting stops, and it works okay for me. But average true range, there's no harm in looking at it to get a feel for normal volatility. So yeah. We looked at gold. Can I scalp the 1 minute candle using your platform? If you want to, you can. I mean, I wouldn't recommend it as a strategy, but it's your money. Knock yourself out. So yeah, I mean, the only thing you have to think about is the spread, isn't it? The spread in the market. So if I looked at the Nasdaq, I don't know what market you're thinking about scalping, but you know, Nasdaq spread is it what, a couple of points? So that's going to be your fee if you're trying to scalp it off a 1 minute candle. I would say, you know, we have that risk warning at the beginning. Most people lose money. Most people lose money trading. I think one of the big reasons that most people lose money is because they're far too short term. So I don't think your scalping strategy is going to be effective. And if 20 people were going to scalp a 1 minute chart, I'd have a bet with all of them that they're not going to make money because I'm going to come out ahead. But there's no reason why you couldn't scalp it. But I would maybe rethink that as a strategy. But good luck to you, whatever you decide to do. Commodities and precious metals. Nikkei, yeah, we did. Is that a good position to short? Yeah, I do think if the Nikkei breaks that level, that 26,500 level. I mean, it's a big level, isn't it? It could be an interesting short. It's been such a crazy couple of months for the Japanese index. Euro dollar, we did euro dollar. Okay. Please talk about euro US dollar as you always do. I'm stuck with a long. Now, there's no reason for you to be stuck with a long because you can sell out, can't you, if you want to? So, you know, I think this is quite interesting actually, because another reason people lose money, I think there are two main reasons people lose money when it comes to trading. Too short term is one reason, and ending up with a bigger loss than they were expected. So by saying you're stuck with a long, that's suggesting to me you bought it and you didn't have a strategy for getting out if it didn't turn out the right way. And you're not alone. I had an email off somebody a few weeks ago who's down, I think about $35,000 going short oil, just selling it as it goes up, and no strategy for getting out when you're wrong. So for me, if somebody gifted me a losing euro dollar position at the moment, a long position, and I had to put a stop on it, I'd put a stop under the low from whenever it was, the 6th of October, down at 115. That's what I would do. But you know, it's a process we all go through, and it's a lesson to learn. If you're going to trade sensibly, you need to have an idea of where do you get out if the trade doesn't turn out very well. Okay, in my opinion, every trade you do, you should have a stop loss. Otherwise, you are probably destined to be one of these 75% of traders who lose. You know, you need to treat this seriously and say, right, I'm going to buy it here, but if it doesn't work out, I'm out. I'm on to something else. ABEV. Let's have a look at ABEV. Let's take a look at that. ABEV. AmBev. Is that the right one? Yes. What do they do? Beverages. Oh, is it? Yes. Let's have a look at that. I think we've looked at this before, haven't we? Let's take a look. I mean, that's interesting. To me, that is an interesting one because you know the trend since May has been up. I mean, it's come off a bucket load since June, isn't it? Is this in dollars? I think, isn't it? So it was $3.90 in June, and here we are at 268. So this, for me, is one of those ones to look at buying the dip, but I want to see the dip stop first of all. So for me, I'd rather see, you know, perhaps something like this. If we go back to August, September, where it makes a bit of a double bottom type thing, I don't want to buy into a market that's just selling off, but I would look at being a buyer because we do have good support from the 1st of March at 235, support coming in at 250. So for me, it's an interesting one to watch, but that trend is still down off those highs like that. So we've got sort of conflicting trends going on there, haven't we? So I think it's interesting. I'd be looking to be a buyer, but I'd be in no hurry to buy, is what I'd say. But interesting to see if it does start making a base down here. PayPal, let's have a look at PayPal. Oh, I should mention, of course, our stocks channel. So we do have a stocks channel where we do look at individual stocks. If you look in the description of this, this live stream afterwards, the link to the stocks channel is in there. And I've just done a video today that'll go out this afternoon. And we have a very quick look at Facebook, Tesla, Virgin Galactic, and AMC. So we do 3 different stocks 3 different videos every week on stocks. So if you subscribe to that, you'll get there. PayPal's an interesting one. I remember looking at this before because I've drawn that trend line on it before, haven't I? And I suppose we could sort of tweak the trend line so it looked like that because it did push out to fresh highs. This is another one where I would be a buyer. I'm always willing on the first break of a trend line to give it a second chance and still assume the trend is up. So for me, maybe it's the trade we'll do today. An aggressive trade is to take the view, okay, it's fallen out of the trend a bit, but perhaps the weakness has been overdone. So I think there are a couple of ways of playing this. Stop loss underneath the most recent low from this week would be at $250. Perhaps a more relaxed stop loss is down here at 232. Maybe we split the difference and go 240 for a stop. So I'm going to be a buyer. We're going to be a buyer of PayPal. We normally risk 100 quid on these trades. I'm going to put a stop loss in at, what did I say, 240. If I buy 6, there we go, buy 6 PayPal at 264, wherever they are. Stop at 240, my risk is 105 quid. So I'm taking the view, perhaps this weakness is getting a bit overdone and the broader trend is still just about up, but let's do it, let's buy it. There we go, done. So bought 6 PayPal at 263.88. So I think it's interesting. Like I say, an aggressive stop will be underneath those lows at 250. If it does start breaking down to 250, it looks a little bit dubious that maybe we do have a new downtrend starting. But it is an interesting one. What are your thoughts on Cardano crypto? Absolutely no thoughts at all. I don't look at these. I don't know what you'd call them, alternative cryptos opposed to Bitcoin and everything. So this is the first time I think I've ever looked at the chart. I like I often say when we look at some of the meme stocks, I find it really hard to trade sensibly these markets, because they go from, in this example, 1 in July to 3 in September and back to 226 now. So crazily volatile. If I had to be a buyer now, I would put my stop the other side of 185 personally and take the view that perhaps the sell-off from the September highs is finished and we've built a base and maybe it goes up. But I'm not a fan of crazy volatile markets like these. But again, as I often say, if you make money doing it, good luck to you. That's the name of the game. But for me, they're a bit too volatile. But I'd probably rather be a buyer rather than a seller. Would you be buying any natural gas or oil stocks now? I suppose so. I think I do. I did look at Shell this week, Royal Dutch Shell. Big breakout by Shell. The share price of Shell. This is in US dollars, not the UK listing. So I'm sure there are still opportunities out there. I probably, if you look at natural gas, the volatility has really ramped up over the last couple of weeks. Oil, I think, is perhaps a bit more of a sensible trend. But I'm sure, if you think there are going to be even more higher prices for the likes of oil, I think, I'm sure some oil stocks would be interesting. Let's have a look at BP, for example, BPGP. There we go, BP. So similar to the move in Shell, a bit of a breakout going on, or has been going on over the last couple of weeks for BP. So for me, I'd still be looking to be a buyer. Do you fancy cocoa and sugar? I think sugar's been a good market for me this year. I think I've talked about sugar in the past. I've done a few trades on sugar this year. Cocoa, I think I've missed it a bit, cocoa. But that trend since, if we did it something like that trend since 2017, so we're 4 years into that trend is still up, isn't it? The only question is, if I was a buyer now, where would you put your stop? And I suppose we could zoom it in and take a look at the shorter term trend, which looks something like that. So if I was a buyer now, the absolute closest I'd want my stop would be the other side of 2,500, which is about 10% away from where we are now. And it's always the trade-off, I think, isn't it? When you have a market that's moved quite strongly like this, do you wait for a sell-off and get a better price? The risk is it does a natural gas or a cotton and takes off. But for me, I'd still be a buyer. It's just a question of where would I buy. And sugar, I haven't looked at sugar for a while, for another few weeks anyway. But it's been a great trend. It's sort of going to, I probably will buy in again, actually, because that trend, that's going back to May 2020, lovely trend in sugar. Bit corrective, perhaps, at the moment. But again, if I was a buyer now, the closest I've had my stop probably down at 18 for sugar, but the trend is still up. Recently traded to its best levels since 2017. So again, it's all these raw materials, commodities, have all really ramped up this year. And this is why, one of the reasons why I don't think inflation is going to be as temporary as some of the central banks think it's going to be, because everything's got a lot more expensive. But let's see. But yeah, sugar, trend still up on sugar. Tesla, let's look at Tesla. That's one of the ones going up on the stocks channel today. We've got an old trade in Tesla, haven't we? Where is it? There, from the 18th of May. It was so how many months ago is that? That's been running for 5 months now. So bought in at 580, and the stock is 783 today. So that's been good. That's what, a couple of £100. What's that? 30% return on that. Still in the trade, and the trend is still up for me on Tesla. We had this sell-off from January from $900, made a base down at sort of 550, and since then it's just been chugging higher. So again, for me, it's still a buy the dips market, Tesla. Over the last week, we've seen it at its best levels since February of this year. For me, lots of support around $700 for Tesla. So it's only if it started breaking below that would I start to worry about a deeper sell-off. Do you think that multiple time frame analysis is better than single time frame analysis, or it does not make much difference? Good question. I must admit, for my own trading, I only tend to look at one time frame, and the time frame I look at is the daily chart. So I have got absolutely no interest in looking at a 5-minute chart of Tesla to try and figure out whether or not I'm going to buy or sell. But probably the pure approach, really, let's flip it over to a market, to the DAX, something like that. The pure approach would be to start with the longer term time frame and work your way down to the time frame you want to trade. So for me, if I was trading off an hourly chart for a short term trade, I really should be looking at the daily chart. So I do think there are merits, definite merits, in looking at all the data you have. And again, to reiterate a previous point, most people are too short term. So most people are too busy looking at shorter term charts and miss out, I think, on the bigger picture. So I think there's absolutely no harm in looking at bigger picture stuff. Alibaba, let's have a look at that. Let's look at Alibaba. They were getting really clobbered, but I did wonder if they were going to turn around, but I'm not quite sure what's happened. Let's have a look at the stock. So it's interesting, isn't it? We've watched this trend all the way down, pretty much. So where were we? This time last year, $320, and here we are, they've halved. They've halved in a year. Big support from October 2018 and December 2018 at 130. Quite a nice little blip up over the last few days, but for me, that big trend is still down. So even if I was going to be a buyer, I would be in no rush to buy just yet, personally. So it's interesting that we've seen a strong move over the last few days, but we've seen plenty of strong moves on the way down, and ultimately it's gone lower. So I think it's an interesting one to keep coming back to, but I'd be in no hurry to do anything just yet on that one. Can we have a look at Palladium? Yeah, Palladium's got really clobbered this year. The last trade I did on Palladium was a loser. It had been, I think I've said before, great market in 2019 and early 2020. And then it pushed out in May of this year to, I think was it fresh all-time highs at $3,000, and it's absolutely dumped since then, Palladium. So for me, what are the levels to watch? I think it's interesting that it stopped ahead of the lows from June, July last year. So 1800 has emerged to be pretty good support for Palladium. But I would probably still argue, and it is a market I do like trading, that the trend is still down. So I probably am still leaning to be a buyer, but I'd be in no hurry to buy just yet. I want to try and see what happens with this downtrend. So let's see what happens. So, but it's interesting. You can see what big support this was after the crash in March of last year. Sort of 1730 to 1800 was big support, and that's where it's stopped again recently. So an interesting one to watch, but nothing there for me immediately, I'd say. We need to Palladium, the Russian index. I don't know if we cover that actually. Let's have a look at the Russian index. Is it that? Is it that RTS? Hang on a second. RTS. I don't know if we cover it actually. Oh yeah, no we don't. No, we don't list it yet. I think it's still waiting to be available. So unfortunately we can't have a look at that yet. Have you used the exponential moving average 200 and stochastic RSA for the US 30? No, I don't really use indicators personally. I'm just very much a price-based trader. Facebook. Let's have a look at Facebook. I think is an interesting one. Clearly, we had those outages. It's the most one of the most traded on our platform. I think it's the second most traded stock on our platform. I would be a buyer of Facebook because this big trend off the March lows for me is still up. We've got, I think, good support coming in at $300 potentially. So I think it's an interesting one to watch over the next few weeks. It's one of the videos going up on our stocks channel later today. So it's quite interesting for me because that trend is still up. So I would definitely be looking personally, and clearly no one's got a crystal ball, but I'll be looking to be a buyer in Facebook and see if 300 holds, or 320, I should say. 320 is the level. So it's an interesting one. Netflix. Yeah, let's have a look at Netflix. That's doing really well, isn't it? I remember we looked at these the other week, didn't we, when they were breaking out, because they had been pretty boring from the summer of last year till about September, stuck in this wide sideways range, but it's broken out. So for me, if something breaks out, then I want to be a buyer. So if I was a buyer today at 640, where's the closest I'd have my stop? Probably down at 560. But that break is I'm quite surprised actually that it's doing so well. But there you go. Strong move. That's a strong technical signal. The fact it's broken out through these levels. So for me, I'd happily be a buyer on dips. If it dipped much below 560, I'd be worried we're going back into the range again and back into this boring sidewaysness. But overall, that looks pretty positive to me. I'll just do a quick update of the contacts. So to find out more, go to Capital.com to open an account, open a demo account, open a real account, get access to all the markets that we look at today. Any questions, drop me an email, david.jones@capital.com. Follow me on Twitter, @JonesTheMarkets, and follow Capital.com on YouTube, Twitter, and Facebook. And don't forget the link to our stocks channel in there. So I just see someone just say crude oil hitting $80. So that is a new 7-year high for crude. Let's have a look. Where is it? There we go. Yeah, just where did it get to? 79.70. So it is definitely new 7-year highs again for crude oil. Crazy markets. We looked at Netflix, Affirm Holdings. I did something. I think I looked at those this week actually, Affirm, and I think they're pretty crazy volatility again, isn't it? It's gone from $50 to $138 in about 4 months. And I would, if it was me, I think someone said it might be a meme stock again. If it was me, I would get a bit twitchy up here. I think Did they only IPO earlier this year? I don't know. But I get a bit twitchy up at sort of this 140, 150 level, because this is where they ran out of steam last time round. But as I say, with some of these crazy stocks, I really don't trade them because they're too nuts. It's moved 30% this week. It's just crackers. But again, if you're in it, good luck with it. So we looked at Netflix, Zoom. I've looked at Zoom for ages. I wonder how they're doing now. Now everyone's going back to work. Let's have a look. Not good. Wow. That's quite incredible, actually, isn't it? So Zoom, of course, the video conferencing people that lots of people were using during lockdown, went from, where did it go? So March 2020, $105, traded as high as $585, and here we are at $257. So they've halved over the last 12 months, Zoom. And I would have to stay, still looking pretty weak, Zoom. I mean, we've got a bit of support coming in at 225, so it's an interesting one to watch. Maybe let's keep coming back to it and see if it makes a base down here, but pretty weak, I think, Zoom. Let's see. What is the leverage in your account? Don't the fees eat up your profit? No, they don't. I mean, clearly there are overnight fees. You can see it here. Here you go. So on my Tesla trade, for example, I'm paying 43 pence per day to keep the Tesla trade running. So that's costing me about £12 a month because it's a CFD trade. It's up £600 in the last 6 months, but clearly the fees have come out. So for me, for trading CFDs, which is what these are, they're not really designed for holding positions for years, but I'll be quite happily running CFD positions on leverage for a few months if the market's going my way. But if I wanted to buy and hold Tesla for the next 10 years, contracts for difference, leverage trading is not the ideal way of doing it. Oh yeah, missing it. We've checked. Someone asked about these insights on the platform. There was a button here. It's gone missing because we're getting something new in. So it's disappeared for a little bit, but it is coming back in a different format. The insights stuff is coming back. So yes, when I know more on that, I'll let you know. But I did ask. So someone did tell me actually. We watched the webinar last week. Disney. So look at Disney. These were a great performer, I think, but not so much lately. It's a bit boring, isn't it, really, to be honest? Great run into March of this year, and just boring since then. Or boring since May, I should say. So for me, it's a bit range-bound. If I wanted to be a buyer now at 177, I'd put a stop loss underneath 167, but it's just a little bit boring and a little bit range-bound this week. Volkswagen. Let's have a look at Volkswagen. I wonder how all these car companies are doing with the old electrification going on. Volkswagen Stock. That's interesting to me. That is an interesting one because we had this trend off the March lows, banging around the trend line now. So I would personally be thinking about being a buyer, but I'd want to see just this downtrend that's hanging around just end. So I think for me, it's about being a little bit patient here. But it's quite an interesting one to keep coming back to. Let's come back to it in a couple of weeks to see if this slide from wherever it is, 250 euros down to 188 is over. So I think it's one to keep an eye on, Volkswagen. We looked at gold. Hut Group. Is that Hut Group the UK listed stock? Because that has got absolutely clobbered, hasn't it? We don't cover it. That's a shame. Can't look at that one. I think it's too small. How about Mongo? What's Mongo? MongoDB? Is that the one? General purpose database platform? Is that the one we want? Where is it listed? US dollars? Okay. I mean, it's done well over the last year and a bit, hasn't it? It's gone from $180 to $470 at the moment. Again, for me, when it's moving like that, I'd want to be a buyer. I think the only question is, where would you buy? Arguably, if I was a buyer now, the closest I would want my stop would be down at 420, the other side of the trend. But again, another bit of a crazy volatile one over the last month or so, isn't it? Swinging around from 520 to 440. But for me, that trend on Mongo is still up, and interesting to see if that 420 level holds on Mongo. Did your WTI order get filled? I don't think so. I'll have a look, actually, because I did a video this week, didn't we? And hang on a second. No, I had an order to buy at 74 on crude oil, and I think I've missed it because it's still there. How low did it get? Oh, it traded down to 74, 73 yesterday, so I didn't really get close on that. But it was worth a go, actually, to try and get filled on that trade, so I didn't get filled on that. Natural gas, we've done natural gas. We looked at natural gas really early on, so you can watch that in the recording. Really volatile. The last couple of weeks or so, natural gas. There is a floor at 540, but I think it's quite a tricky one to trade at the moment. Phase. Let's have a look at Phase. ENPH. Phase Energy. Where are they? US dollar. Home energy solutions for the solar photovoltaic industry. There you go. It's a new word of the day for me, photovoltaic. I'm not quite sure what's going on with all these lines. Hang on a second. I think it's a bit of a messed up one for me. It's just, if you look at it like that, it's pretty sideways for the year, isn't it? So for me, it's a bit of a nothing stock. I suppose an aggressive trade, be a buyer now with a stop loss the other side of 140 or 130. But it just looks a bit aimless, I think, to me. That's what I would say on that one. What is your opinion on small market cap stocks? To be precise, Dolphin Entertainment. Okay, I don't know. I don't think we cover that if it's going to be too small. No, we don't cover that. Small cap stocks attract people because the potential for perhaps a massive move. I must admit, it's not an area of the market that I look at. I think it does attract people because they're often cheap. So they think if a stock is trading at 10 pence rather than £10, I can buy 1,000 times as many stock, and if it goes to £1, I'm going to make a load of money. Blah blah blah. So I think the psychology why some people are attracted to small cap stocks is wrong. Clearly, you can have massive upside if you find the right small cap stock, but I think there's also a lot of rubbish at that end of the market, and it's quite hard perhaps to filter through and find the right small cap stock. So again, if somebody is good at picking small caps, they can see some great returns. But I think for a lot of people, not a lot of people, but some people perhaps treat it like something of a lottery ticket, but it's not an area that I look at much, to be honest. Dollar yen, somebody said. So we have seen, again, we often see on payrolls day quite a bit of dollar volatility. I mean, dollar yen, I'd have to say, is positive. I think I've traded it a bit twice, I think, this year. And I think it's just it's got a bit messy throughout the summer. But the fact that, end of September, the dollar hit its best level against the yen since Feb 2020. And here we are again. So for me, I'd be a buyer. As usual, the only question is, well, where does your stop loss go? Who knows? I mean, maybe we wait to see if it breaks out through 112 dollar yen. It could be one to watch next week. But I am finding this with a lot of currencies at the moment, that it's quite difficult, quite some scrappy moves in recent weeks, and perhaps a little bit harder than it has been at various points this year. Euro, Swiss franc. Yeah, someone said buy the dip. I would be a buyer down here. Maybe not today, but maybe next week. Because again, the question is that downtrend over? That is the question, isn't it? And if it breaks below 107, then it isn't over. But in terms of risk reward, it could be an attractive trade. Perhaps you give it a bit of wiggle room and put a stop under 106.50. But if I'm a buyer at 106.726 and I put a stop at 106.50, I've got 75 points risk. And if the euro is going to rally all the way back up to the September high, I've got 200 points upside. So that, in terms of risk reward, it's a really interesting trade. So I think there's one to watch next week, Euro, Swiss franc, and see what happens. Costco Wholesale. Let's have a look at those. Costco Wholesale. There we go. Looks good to me, I think. That trend has got a bit... It's been a great performer over the years, isn't it? If we go back, go back to... back here, when was that? Late 2018, $190, and recently as high as $470, near enough. So as usual, the question is, do you wait for a sell-off, or do you just buy it now and hope it's going to move higher again? It's a tricky one, I think. Where would you put your stop? I think the closest I'd want my stop, the other side of 435. But I think it's always difficult for me when they've run away so much like this with very little in terms of pullbacks on the way as to where would you get in. So let's see what happens. Right, I'm going to have to wrap things up there, unfortunately. Everybody, thanks for coming along. There won't be a live stream next week because I'm away next week from the end of the week, so we won't be doing a live stream then, but we'll do it again, of course, in a couple of weeks. Take a look at the stocks channel. There is a video going up this afternoon on the stocks channel. To find out more about Capital.com, go to Capital.com. Any questions after today, drop me an email, david.jones@Capital.com. At Jones the Markets on Twitter, and of course follow Capital.com on YouTube, Twitter and Facebook. So we'll see what happens next week. I mean, there's lots to watch. Oil is an obvious one to watch because we are at 7-year highs on oil. That would suggest it's a strong trend, but let's see what happens next week. Stock markets, because I think stock markets are a bit choppier, a lot choppier than they have been. The Nasdaq is back pretty much to where it was when the payrolls came out. Are we seeing new downtrends for stock markets, or and we're going to see them just take a bit more of a dump lower next week? So lots to keep an eye on, and perhaps sentiment is changing, and all of that inflation data coming out next week as well. But we'll wrap things up there. Good luck with your trading next week, and we'll do it all again in 2 weeks' time.